Money mistakes and financial fixes for your farming business. That is the topic today that's going to make you money in another installment of the business side of farming here at Extreme Ag's Cutting the Curve.
Welcome to Extreme Ag's Cutting the Curve podcast, where we cut your learning curve with insights you can apply immediately to your farming operation. This episode is presented by Loveland Products. When it comes to crop inputs, you need products that are field proven to deliver both results and value. For more than 50 years, Loveland Products has been providing farmers with high-performance, value-driven product solutions designed to maximize productivity on every acre. Visit lovelandproducts.com to see how their innovative products can help you farm more profitably. And now, here's your host, Damian Mason.
Welcome to another fantastic episode of Extreme Ag's Cutting the Curve. Sometimes we put out episodes that are not about agronomics, not about soil, not about equipment, not about crop inputs, not about maximizing your yield. Instead, it's about maximizing your business. You know, farming is a business. You deal with a whole bunch of capital. Depending on the size of your operation, even if you're a small farmer, you have a lot of money at play. Crop inputs are expensive. To put in an acre of any crop takes a lot of money, unless it's a cover crop. And even then you got to spend money. You've got a whole bunch of assets. And also let's look at what the value of farm ground is. You know what? It's peak level right now. So you're talking about money. Your farming operation is a business. So what mistakes might you be making? What mistakes might you avoid? That's what we're doing today. Money mistakes and financial fixes for your farming business. Yes, we're going to continue to call it a business. I've got Ben Hansen. He is with Gross and Company of Dunlap, Iowa. They're an accounting firm that does advisory and consultation work for the money and business side of farming operations and agricultural entities. In fact, he works with Kelly Garrett. That's how Ben and I know one another. We've had drinks together in Omaha. Every time we're together, he always says smart stuff. And I said, you know what, Ben, since you're smart, why don't you come on here and give us some content to help the Extreme Ag followers and members and listeners improve their business. Money mistakes, financial fixes for your farming business. Ben, thanks for being here.
Hey, thanks for having me, Damian. I look forward to discussing this. And we do need to have a drink again here one of these days down in Omaha or maybe even in Dow City at O'Meara's or something, right?
I'm good with all that. When we talk about financial fixes, let's go to the mistakes first. Farming people are very, very good about production and they focus on it that's what they're into. Factory, production. But you're like, okay, let's talk about profit. Let's talk about the money side of it. What money mistakes do you commonly see with people that come in the door of Hansen and Company? Gross and Company, sorry.
Gross and Company, yep, thanks, that's fine. There's a laundry list of them, but one that comes to top of mind here as of just recently is failure to fix your debt or set up a fixed rate on your debt. So you go and buy a farm, whether it was off the market deal or it was an auction deal. A couple of years ago, you paid 10, 12, 15,000 bucks an acre, and you go to your banker, and your banker's like, yeah, we can fix your debt or we can give you a loan for 2% interest, and it's just going to adjust every time that the Fed adjusts rates. And at the time the Fed hadn't done anything in a long time, and the max rates had been maybe 5%. And you said, okay, fine, I won't be variable, and with my rate's going to be cheap. Or the other option was it's going to be double, but I could fix that debt for 10, 15, 20, 30 years. There's a ton of products out there that allow you to do that. And I've had a couple clients against my better wishes that didn't fix their debt. Now they find themselves fix their rate on their debt. I apologize. Yeah. Now they find themselves in the position of their rate maybe 7, 8, 9% on some of this long-term money that they have, and all of a sudden it increases their cost of production, because in my mind rent is also the same as interest on a piece of ground. So whatever your annual payment is, principal and interest, is divided by the acres is your equivalent of rent, right? So you want to have the right of use to these assets. So if you have the opportunity to know that it's going to work at X interest rate turned out over a period of time, then why not do it? Take some of that interest rate risk out of your operation. So that's one thing. Unfortunately, hindsight.
I want to interrupt just for a second. That thing there was a time when folks probably thought, hell, we're never going to have high interest rates again. It sputtered around. Interest rates were cheap, and it depends on your perspective and probably even your age of experience. Because first house I bought was at variable money, but it was fixed for 7 years, and I thought I'm not going to have this house for more than 7 years, and I think I paid 7.5. And I remember like older people saying, "Oh, for a house I bought, I paid 16%, 14% interest." So then we got to this era of low interest, which was 15 to 20, almost 20 years of pretty darn low interest, like hovering around like 4.5 to 5, 3 to 5, right?
Right.
And so now we're in this thing where interest rates are going. So a mistake that you saw made was folks didn't think, oh, these interest rates can move upward. Essentially, that's what you're saying.
Right. Yeah, that's exactly what I'm saying. And not to say that they're not going to go back down, but in the near term, I would say the next 2 to 3 years, I don't see them going back to that, 4 or 5% anytime soon. It's going to take a lot of time for the Fed to figure out what they want to do.
Yep. And by the way, depending on, you might be listening to this in the year 2029, and this is all past, but we're recording this. We're recording this in the summer of 23. So anyway, okay, money mistake that you see made besides not fixing interest. What's the next one?
So that would be one, and the next two kind of relate a little bit off of each other, but poor record keeping is one. Is that someone maybe misses a big expense, doesn't account for all their income? The thing that really concerns me is that people don't truly go through their bank account as they should. As many transactions that are going through people's bank accounts now, I typically recommend that they have a form of an electronic record keeping system. It helps, one, to make sure you've captured everything, but in the event that you ever have an IRS audit, it gives you documentation of what you're deducting, what income you're picking up, and thirdly, it also helps your banker understand that you've picked up all these transactions, that you have everything taken into account, and you have good records, and you're organized. So that would be number two, is poor record keeping, along with that record keeping. If you don't have it, you can't really do a good job of planning for year end. Trying to figure out, how much tax am I going to pay this year, or am I going to get a refund? Most of the time, from a farmer perspective, is how much tax am I going to have to pay, and where are we at? What can we do to best plan for this going into the end of the year? I truly hate that guy that wants to put everything off until the last week of the year. To go through everything, because he hasn't gone through any of his books since December of the previous year. It tells me that they really don't want to understand what happened to their operation for the year. What are the fruits of their labor, if they did have fruits, or what are the drawbacks of, hey, we had really good markets a year ago, and now they're not as good, and the crop was okay, but even like we're in 2023, and we have a record year of inputs.
Yep.
High inputs, prices are falling. We get to year end, and I can just see some of my clients like, well, I didn't make any money this year. Like, well, what about all the grain that we deferred from the prior year to 2022? We forget about that. So let's make sure we manage your tax rate at year end. Let's prepay. If we need to buy a little equipment, we can. Let's do what makes sense to help us manage that tax bracket. Prepayments are kicking the can down the road. Equipment, if you don't need it, doesn't always make sense. But the only at the end of the year, the best advice I can give you is that we really manage the tax brackets that we have, pay a little tax, and make sure that we're doing the right thing to project out to the future of where you're going to be down the road.
I like it. By the way, you just ran through a bunch of little things there. Obviously, the farmer story is, I'm having a fat year, so in December I got to go and buy some equipment at the last minute to get some money off my books. That obviously does do the job of getting money off your books, but also it could be silly if you are buying something that has a big cost that also is fairly low return. You
Right.
miss out on some tax payment, but you also bought an asset now that you're sitting on that you don't even need.
Right. I like to focus on the economics when we're going through some of this planning stuff. Is if you truly need it and you're going to buy it in March of the next year, well, yeah, it makes sense. So maybe let's accelerate that payment to December, or that purchase to December, and get it on your books and get the tax benefit for it. But if it's going to cost you 25% more in December versus in March, then maybe let's prepay so that we can delay that purchase. And so I like to think of our firm as a business-minded, economics based firm, rather than just saving someone taxes, not paying taxes, tax prep. So that's really a thing that we try to focus a lot on.
Is there another money mistake? We talked about the management of debt and interest rate on debt, and then I heard you talk about record keeping, and then I kind of heard you talk about understanding your expenses. This is the one that I see, and it's not just farm people. I've run my own business for 3 decades. A friend of mine had a business and was new at it, and I said it was like late summer, early fall. I said, "What's your revenue picture look like right now? And where are you going to end up on expenses versus your revenue?" So I don't know. I said, that's kind of important. So it was very apparent to me that this guy thought it was a neat idea to have a business, or thought that people that ran their own business just printed money. But I said, well, what's the revenue picture? You must have, do you know what you've made so far? Kind of. Do you know what it looks like for the next, the fourth quarter? No. Do you know what you spent? No. I don't think farmers are that bad because they know they pay for the inputs, but I'm still not convinced that they really have their cost of production dialed in sometimes. And I'm not sure that they really know what the revenue looks like. And that comes to that thing of they get to December and say, oh, crap, I got to do something. Am I accurate in that?
Yeah, I would say you're pretty accurate. And unfortunately, the part about farming that's difficult is that you're prepaying expenses in December. You might not be picking up the revenue until the following year.
Right.
So I've even had bankers ask me, like, is this guy making any money? If all they're doing is trying to not pay tax or manage their tax position, and they're not using what we call in the accounting world an accrual basis of accounting, is so figuring out what your inventory is at the end of the year, how much your prepaids for the following year. Yeah, that's not something that should go into this year's crop. If you're not doing that, it's hard to tell, if you were profitable for that year. And, it's such a volume game, and it does take a significant amount of time to sit down and do the thing that people don't like to do, the book work, right? The number crunching. And I had a guy this morning tell me, he goes, I hate paperwork, but it's the only way I get paid, so I have to do it. And like, if you don't want to do the paperwork, maybe you should just be sitting on a beach and be a beach bum, right? Because, ultimately you just don't farm for fun, right? It's you're in the business of growing this crop and trying to be profitable. So why not figure out if you were profitable? So, I think this is a good transition into, the money mistake that I do see, understanding cost of production, but also understanding what paying a little bit of tax does for you. And I've heard the argument of, I don't like to pay the government because I don't think they appropriate it right.
Yeah, right.
What's my return on investment? And I would argue to a lot of my clients, is it doesn't matter how they appropriate it. But what does matter is that we pay the tax at a reasonable rate, because if you don't now, down the road when you are getting out of farming, it is just a matter of time when you pay it, and it'll be at a much higher rate.
Yeah, you're talking about, granted, we all like to take advantage of all the deductions and whatnot that we can if we run our business, but there are times that tax avoidance is not always the best business move. And I've heard it said from people like you before, sometimes they do that big acquisition and get rid of a whole bunch of cash, and then to avoid taxes, and then they're not in a good cash position, and then they're, at this point now, they're borrowing 9% operating money. It might have been smarter to pay some taxes and hold some cash. And I've heard that before.
That's 100% true. And, I like to tell people, I'm like, would you rather have, 70 cents in the bank after paying a little bit of tax, or have $0 in the bank and some assets that I may or may not use or I didn't need, right? And so a lot of times when people sit there and think about it, they're like, well, I'd rather have maybe the 70 cents in the bank, but I just don't want to write that check for the 30 cents. I'm like, well, you're still not following what I'm, explaining here is you never want to be cash poor if you don't have to, right? So if you can manage the bracket, then if you can manage the bracket, you should, and make some of those good decisions. And this is, another thing is understanding the taxes that you are paying.
Mhm.
I tell people that we file 2 tax returns if you're in Iowa. File a federal tax return, an Iowa tax return, but you actually pay 3 taxes. And they're like, what do you mean? I'm like, well, you pay federal tax, you pay state tax, but you also pay self-employment tax, which is filed on your federal return. So a lot of farmers are paying self-employment tax, which is building themselves Social Security
Yeah,
credit.
it's basically it's the Social Security payment that if you had a traditional job, the employer would be making on your behalf, and since you're your own employer, you're making it on your own behalf.
Yeah, and it hurts, as being self-employed, you pay it all at the end of the year when you file your taxes. As an employee, you pay it every 2 weeks, so it just comes out of your check. It's a part of living and working. So to the extent that I can get people to pay the minimum Social Security credits, the minimum amount of Social Security and Medicare tax to build the credits for the year, I always encourage it, because you're giving yourself a pretty good return on investment, from a Social Security perspective. And then the next argument is, well, how do we even know if Social Security is going to be there? Um,
And we and we don't. I understand that argument. We don't
right.
necessarily.
How do we know if the sun's going to rise in the east tomorrow morning? We truly don't know that either. But I would say that the sun rising in the east is probably a more given, right? But when every time a politician, gets into cutting Social Security, it seems like it's a non-mover to everyone. I would say maybe it will get some of the benefits may not grow at the rate that you've seen, but I I had a class last week that I attended, and um, the guy leading the conversation was completely about ag. He said if you pay the minimum Social Security, the minimum for credits, on the first bin, which is about $11,000 times 15.3%, it's about $1,600 a year. If you did it for 35 years, you add interest onto it, all these other things, and
Yeah.
you figure out what your benefits are from your full retirement age, which is 67 until 77, just 10 years, your rate of return is something like 10%. If you live for 15 years, it goes to like 14%. If you live to 20 years, it goes to 17 or 18%. He's like, I will tell you this, there is nowhere that you're probably going to get a better return, guaranteed return on your money.
Yeah, that's something that I appreciate that perspective, because I also am one of those guys that thinks, well, Social Security could go away, whatever. But if you live, and plus, you're legally bound to pay it anyhow. Okay, get me out of here. Financial fixes for your farming business. We covered a lot of them there. We talked about the money mistakes. Is there any big takeaway? Give me the last nugget. The last nugget here. What do I need to know? And I'm not being mean, but a lot of agricultural producers, they want to be well off, but this is the last thing they go to. I mean, they like you said, they hate doing the business side of it. They hate doing the paperwork. They'd rather go out and be on the field, out in the scouting fields, in the tractor, whatever. So what's your piece of advice for them to avoid financial money mistakes and to take some corrective financial fixes?
I would tell you that this is a great conversation that actually someone else brought to me probably 7 to 10 years ago, was to build your team. You weren't necessarily educated in taxes. You weren't educated in banking. You weren't educated in law. You were educated in farming. So build the team of trusted advisors that you want to work with you. Find yourself a good banker, someone that wants to work with you, not against you. find yourself an attorney that you can trust. Sometimes those two words don't go to necessarily together, but there's a ton of really good attorneys out there. That's not the stereotype of, well, I don't trust them. Anyway, I digress. Find an attorney that you truly can trust and will act on your best behalf, that you can call when you need something, or he'll call you back. And then find yourself a good accountant, right? Find just someone, a CPA, maybe an enrolled agent, someone that truly understands the tax law, that understands the economics, your operation, and can give you some good advice. And then finally, I'd probably tell you, find yourself a good financial advisor. It seems like everyone wants to, not everyone, but farmers in general want to reinvest all their earnings right back into their farm operation, but it's good to diversify. So why not pull $10, $15, $20,000 a year out of your farm operation and invest it somewhere else? It seems like when Wall Street's doing really good, Main Street's not maybe doing as well. When Main Street's thriving, maybe Wall Street's not. That's the rural America mindset to some extent. So why not diversify? So build your team, find the people that can help you do the things that you're not necessarily educated and an expert in, and you can count on hopefully being successful long term.
I love that. There's a reluctance to that thing that you even talked about in a prior episode. Well, I don't want to go pay an attorney. I don't want to go and have a bunch of legal fees. I don't want to pay an accountant unless it's exorbitant. And how I've handled it for 30 years of my business, I go in with an actual set of objectives and pre-submitted questions and topics to be addressed. Then it's not just wasting time, and I think that's the
right
advice I'd give. Yes, love your thing. You said have a team, banker, accountant, attorney, financial advisor. Yes, love it. And I say each interaction with those people, be prepared to state your objective or handle a question. That way you're not wasting one another's time, and the billable hours become a tremendous amount more productive. Is that a good recommendation for somebody like you that charges by the hour for consultancy?
Absolutely. You're going to get much more out of my conversation if you come into the conversation with a
Here's
notepad.
My problem. How do I address it?
Yeah. Well, and give me the foresight to say, hey, email them to me in advance, right? Here's my issues. How should I address them? And then when we get into that meeting, if you at least have, your notepad, your pen, your computer, that you can take some notes so I don't have to continue to repeat myself, you're going to educate yourself as well and save yourself a lot on that billable hours perspective.
I love it. I like that. That's a great way to wrap it up. Surround yourself with a team, and don't look at it as its expense. Look at it as you're getting the proper advice, professional services to continue perpetuating, or more importantly, growing your farming business. So I think that's the way we got to look at that. And by the way, speaking of being a productive member of the team, at Gross & Company of Dunlap, Iowa, where Ben Hansen works, they do all sorts of agricultural accounting work, but they also have consultancy. So you don't need any more tax work, but you definitely can take on some consultancy. So if they want to find you, how can they use you? How can they employ your services as a consultant to help their business?
Yeah, you can give us a call or shoot me an email, and we can kind of figure out if you are structured correctly. What is your plan? What are you doing in advance of some of these meetings? Are you getting good advice? And yeah, that's a billable hour service that we can provide to people. Sometimes it leads to bigger projects, maybe down the road becoming clients as we have availability. But a lot of times it's a fee for service. So let's get on the phone. Let's talk about what you have going on, and it may be a 5 to 10 hour project of saying, hey, this is the avenue that you need to go down to get to where you want to be.
I like it also because, as you said, so many people make decisions and do pull the trigger on something, and then by the time they come to you, they've already blown some money or made some adjustments that have cost them. So it's probably smart to get some input ahead of time. Gross & Company, Dunlap, Iowa. His name is Ben Hansen. By the way, are you ready to stand up to weather-induced crop stress? If you're a farmer, you deal with stress, hot, cold, more importantly, no rain. turn to Terramar. It's an innovative biostimulant technology from Loveland Products, designed to help your corn and soybean crops thrive. When you have stress, Terramar can help. Exclusively available from Nutrient Ag Solutions. The product is called Terramar. The company is Loveland, and it's available at Nutrient Ag Solutions. Till next time, he's Ben Hansen, the accountant for agriculture, Gross and Company, Dunlap, Iowa. Look him up. Thanks for being here, Ben.
Thanks, Damian, for having me. Appreciate the conversation.
Thanks for being here, dear listener. Till next time, this is another one of our series of the business side of farming. I'm Damian Mason. Share this with somebody who can benefit from it. It's Extreme Ag's Cutting the Curve.
That's a wrap for this episode of Extreme Ag's Cutting the Curve. But there is plenty more available by visiting extremeag.farm. For over 50 years, farmers have turned to the proven lineup of crop inputs offered by Loveland Products. From seed treatments, plant nutrition, adjuvant, and crop protection products, Loveland has the complete lineup to keep your farming operation productive and, most importantly, profitable. Check out lovelandproducts.com to learn more.